Welcome to the B.F. Anderson Technical Report for October 22nd. The market continues to somewhat struggle here. We're pulling out of this correction, but as you can see here that the daily graph here on the NASDAQ, where we're comparing to the 25 and the 50-day moving average, continues to stay somewhat constructive because the lower moving average has turned up and the index has stayed above the lower moving average. So far so good. Now, on the weekly NASDAQ, where we're looking at the price of the NASDAQ on a weekly basis, the 35-week continues to stay in an uptrend. The index continues to stay above the 35-week moving average. So, on an intermediate term to even long-term basis, the market looks quite fine. Now, on a monthly basis, where we do get real long-term, this is S&P 500 on a golden cross, continues to look very positive. Now, we're still on a golden cross on the NASDAQ. It looks positive. And I must note that the Chinese index that we're using, or an ETF that we're using, is the Golden Dragon China ETF, which is all the Chinese stocks that trade here in the United States. It is acting much stronger than the U.S. indexes, so just be aware of that. Now, on the aggression index, where we're comparing the NASDAQ to consumer staples, this is one of our indicators. However, this is just not the indicator. We'll get to that next, but this is the daily graph of the aggression index. You can see that we hit an all-time high, pulled back during the correction, trying to get back in an uptrend, however, kind of struggling here in the near term. However, on the actual indicator, as long as that 40-week moving average continues to turn up and the actual ratio stays above the 40-week moving average, we are on a buy signal here. So that looks constructive. Now, the three economic indicators that we keep an eye on is interest rates. You can see interest rates are kind of trying to pop up here a little bit. Here's the 200-day moving average on interest rates, continues to stay in a downtrend. Here we have WTIC, which is West Texas Intermediate Crude. This is oil. You can see oil is finally broken out above that 200-day moving average, which is a good sign because the oil stocks have really had a tough time here. Also, oil does somewhat correlate with the economy. Here's the financial stocks, the banks and the insurance companies. 200-day continues to stay in a downtrend. Not seeing much action there, but with the improvement in interest rates, that could help this group. But so far, the group looks weak. Now, on another way to look at the market is the S&P 500, where we're looking at the 25 and 50-day moving average. Again, you're seeing that lower moving average continues to stay up, and the index is above the moving averages, looks fine. Here's the S&P 500 above the 200-day moving average. This looks fine as well. We are in a bull market going through a correction. Hopefully that will be over shortly. New highs. Okay, new highs have improved considerably. Now remember I'm doing this as a 15-day moving average of the new highs on the NASDAQ. So you can see here we hit pretty much an all-time high of 150 plus back here in August. Started to taper off in September. We got the correction. Now we're working our way back up. We're up to about 130 new highs on a moving average basis. So looking better, but not making new highs. Here is the new lows, which are clearly below 40. We had 12 today. No problem here. This would be what we call the leaking boat indicator, which is if the market is making new highs and at the same time we're getting a lot of new lows, that's not a good sign, but that's not the case. We're in good shape there. Now here is sentiment. Now sentiment is very greedy. We're seeing a lot of call buying versus put buying. Remember, this is the CBOE options equity put call ratio, which is where we're measuring the activity of institutions in and out of the options market. So far, they're very greedy. This is a negative. This could be a sign of a correction coming. But the problem with this indicator, as we've talked about in the past, is that it can go this way for a long time. So in the meantime, we just keep an eye on the trends. So if you think about the trends here for a minute, I brought this graph in last week. I want to bring it back in this week. This is the U.S. Mid-Cap Growth Index, the Dow Jones Mid-Cap Growth Index. looking very strong. So what does this mean? This means that the market is starting to broaden out, because in the last couple of years here, it's mainly been the large cap stocks that have been dominating this market. So the small caps and the mid caps are starting to show some strength, which is a broadening out. All right, now we get into the top 5. Now I want to emphasize here, the top 5 is not a buy list. We're just taking our list that we work up every Monday, and then we take the top 5 strongest readings that we're getting. So this is Ceres Therapeutics. You can see here the stock is somewhat broken down. I would not buy the stock. I think I would just sit tight at this point. You don't ever want to see a breakdown like that. But the stock gapped up here, been pretty strong, but this breakdown here would be somewhat concerning. Penn National Gaming, this is one of these gambling stocks, for sports gaming. I do think there's some future in this. The story is very good, but you can see here the stock is somewhat breaking down. In fact, it's about to break below the 50-day moving average. I would definitely pass on this one. Peloton, which is exercise equipment during the coronavirus deal, for today broke the 10-day moving average. However, on relatively light volume. But I would continue to avoid anything that's breaking down right now. Here's Tesla. Now they report earnings this afternoon. I think they're going to come out to be probably fine. Stock is still trading below that 10-day moving average. Would really like to see a breakout above 450 on heavy volume. We're just not seeing it yet. We continue to watch. Tupperware has been on the list for an extended period of time. However, is starting to break down again. I would avoid. So we're not doing a whole lot of buying right now. In fact, we've raised cash. This is probably a pretty good time just to sit tight. The market's acting a little squirmish here. But anyway, if you have any questions, please give me a call. Thank you very much.